So these are more reasons why going cashless is absolutely crazy. Inflation. If banks no longer need cash, they can generate much more borrowing, issuing of credit, as they need not worry about ATMs running dry. They'll have ample time to sort out any deficits, and customers can only spend their money, they cannot withdraw it. And more borrowing by the banks equal higher inflation in the economy. Easier to get into debt. You do not even have to leave the house or answer the door. From simply using a credit card to shop online to interest-free options that come with high interest and charges if you miss a payment. Remember, it's very easy getting into debt. It can be very difficult getting out of debt. Rolling automatic renewal of subscriptions is facilitated by card payments. Gone are the days when you would receive a letter to remind you your subscription was ending and offering you a competitive renewal rate. In fact, new customers will benefit from discounts or best rates, while existing customers will pay a punitive amount. So cancel the rolling automatic subscriptions and only renew when you get the new customer rate. It's also very important to check your card transactions. Hotels, car rental companies can charge your card if they consider you've done damage. They can also make mistakes. If somebody takes a photo of your card or gets the number over the phone, they can purchase items online using your card. While two-factor ID helps, it's always best to check card transactions daily. Phones can be cloned. So if somebody clones your phone and contacts your bank pretending they are you, if they have personal details, date of birth, mother's maiden name, your home address, etc., they can get access to your bank account. In the all cash days, you would have to go to the bank if you lost your deposit book and show your passport or driver's license and maybe even a utility bill to prove your ID. While most organisations now use validators, some banks are still using text messages as a two-factor validation system, and this is open to abuse by bad actors, criminals, getting your phone cloned and accessing your bank account. So to finish up, I just have two questions I'd like to ask to anyone working in the financial services sector. With the ratio of savings to loans being reduced in some cases to 0%, is there any limit to the amount of money that banks can create through the issuing of credit through their loan books? And the second question is, how will the banks cope with a downturn if they're going to have so little assets to liabilities in the future? You know, we know from the downturn, we know from the banking crisis that when one bank got in trouble, they all got in trouble. There was a systemic effect. So what will happen next time? And are the banks really able to survive the stresses if the economy takes a turn?